And to give us some of what he's watching in terms of reporting season themes, Trent Primmer from Barclay Pearce Capital is joining us. Trent, welcome. Just because we ended with a preview of last week there, what's really, on your radar for next week? What are your expectations?
Look, I think the results next week will still be relatively light on. I'm most interested in Baby Bunting, Goodman Group, and obviously CBA. CBA mainly to get a good read on what the big banks are doing in this market, how the economy is tracking, and sort of the moves that they're making. Obviously, dividends have been a pretty big highlight this reporting season with Rio, which was probably one of the biggest to report with record profits and dividends announced. Another key theme, I think, will be what investors do with with the cash flow from these dividends. I think from some of the larger miners, you're going to see a lot of that cash flow through the economy to consumer discretionary, but I think some of the junior miners will probably get a little bit of a buck in the right direction from some of those dividend payouts. And companies like LKY, Sandfire Resources in the copper sector, some of your silver miners, Silver Mines, SVL, lithium plays like Galaxy, rare earths like Iconic Rare Earths, and nickel miners like Mincor should do quite well as a result. So it'll be an interesting reporting season. Last year, reporting season was basically about how much of an impact COVID would have on businesses and if it was permanent damage or if it was transitory. And a pretty low bar was set by the market, and many were able to hurdle it. I think you had 111 odd stocks reporting surprises. About 70% of those stocks traded higher on day one of those results. But in contrast, 84 of them last year reported results worse than expected, but only 50% of those stocks traded down on day one. So I think this reporting season, companies that miss expectations will be particularly harshly judged, and I'd expect broad sell-offs in those stocks that report underwhelming results compared to analyst expectations. And I'd probably expect a bit more downside risk in some of those companies missing earnings. One that's obviously very, very interesting for us to watch with a lot of the corporate action and IPOs coming through over the past 12 months will be Nuix. And some of these companies that have listed that'll be reporting full year earnings for the first time. So it's a bit of a learning market for us at the moment with COVID going on. And I think it'd be a great case study moving forward for the market.
Yeah, all right. Some big names there. Nuix will be an interesting one, as you say. So we talk about this every reporting season. Will there be really knee-jerk reactions to the reports when they come out? Do you think because we have some of those uncertainties now looming, lockdowns and questions over where economic growth will go from here, that if a company disappoints, there will be really sharp, severe reactions in the share price?
I believe so. I think people potentially buying stocks before they report is quite risky. If one of those stocks miss even slightly, or even if there's something negative in the outlook statement or some sort of uncertainty there, that the market will smack them down pretty hard. And particularly in a market that's run so hot, people aren't going to have any patience for stocks that have disappointed. They'll cut their losses quite sharply and move into other stocks that probably have more positive outlook statements and sort of in line with macro trends that we're seeing in the market moving forward. But I think the market will still be relatively well supported after earnings season. That's my view on that.
Okay. And this time last year, reporting season was very much about COVID and the expectations and where to from here. Perhaps for a while we thought we might have been past that trend. But clearly, you'd think that there would have been some revisions to some of the commentary being put in these media releases and ASX announcements around COVID and the potential impact. How do you view companies that are unwilling to provide guidance at this stage in the game? I mean, is it getting a little bit of a weak excuse, COVID, because we've been through this before, so we have sort of a playbook as to how the economy might recover?
Yeah, exactly. And that's a great point. I think, like I said before, a lot of companies and a lot of investors won't buy that excuse anymore. And last year was the tester, basically how these companies going to perform. What do they expect in terms of how COVID's impacting their earnings? Companies should already have a pretty good gauge of this. And I think using the excuse of, a worse variant of COVID is probably not going to fly with investors. And that's why I think a lot of them will be judged pretty harshly, just riding on that same excuse. Some companies are pre-guided and they've still managed to do relatively well when they've reported. But I think using COVID as an excuse, it's getting a bit old.
We will see. Trent Primmer from Barclay Pearce Capital. Look, you'll be getting your sleep this weekend to prep for a pretty big week next week. Thanks for today.
Absolutely. Thank you.